Ever imagine a simple loan could spark a tax war in the ITAT bench? The same thing exactly happened in Manish Chiranjali Jain versus ITO case. If you see the case, what was it? It was held at 2018 in the Surat textile industry. The company which we are talking was in Surat textile industry. The key issues that were involved, that were two. The first one was disallowance of the interest-free loans that were taken by the assessee. The second one was addition on the household expenses. The income tax officer added some of the household expenses, assuming that these were not as per the cost of living of the city that they were living in. Right? The analysis of the same happened during this case. The challenges faced, there were two. Therefore, first, there was justifying the interest-free transactions. The interest-free transactions that happened between the assessee and the other party, was it justified or not? And the second was proving the sufficient household expenses withdrawal. They, the income tax officer added 4.2 lakh 4.2 lakh amount in the household expenses. But exactly what happened, we will see in the further. Now, who was involved? As we said, Mr. Manish Chiranjilal Jain and revenue authorities, AOCIT appeals and ITAT. Now, who won and why? The first one, interest-free loans. Decision, addition, the addition was deleted. Reason, what was the reason that was given? The reason ITAT bench gave that these are the routine transactions that generally happen in the textile industry. The taking up of the interest-free loans is a routine transaction and it is not something that needs to be added back, and this was deleted. The deduction was allowed for the interest-free loans. As we talked about the household expenses, there were 4 lakh amount that was added, but only a partial relief was granted, saying that 1.2 lakh deduction was allowed, that 1.2 lakh was given back to the assessee, but the remaining 2.8 something amount, 2.8 lakhs was added back, was the treatment was given the same as the income tax officer had did, that 2.8 lakh were added back in the income of the assessee. Reason, reasonable living costs for the family. मतलब जो expenses added back रहे हैं वो that was reasonable for living in the city. Now, if we see the why this decision matters, for the taxpayers maintain a detailed record of the financial transactions. The interest-free loan was allowed as a deduction because the assessee had the proof, had the evidence that all these transactions were done, and was having a financial proof of the same. Provide a robust evidence to support the claims. As we talked, robust evidence was there to support the claims of the assessee. For revenue authorities, avoid the reliance on hypothetical estimations. The household expenses that were added back were on hypothetical assumptions that this is the cost of living that is needed for living in this city, but it was not based on some facts. So avoid the reliance on the hypothetical estimations that was told to the revenue authorities, and focus on the industry specific practices. The interest free loan giving practices and taking practices is there in the textile industry. So the income tax officers should know about that industry specific practices and should focus on the same. Now, if we see about the key takeaways, transparency and documentation are critical. Assessee won the case because he had the proper documentation and had the proper evidence regarding the same. The second, tax decisions should align with the industry norms and the economic realities. As we talked about the interest-free loans, it matched with the industry-specific requirements. Robust appeals can lead to favorable outcomes. The appeal made by the assessee was very robust, with supported by the claims, and that led to the favorable outcome in his case about the interest-free deductions, and the partial relief was granted in the household expense case. So that was it. Me, CA Pratham Magayala, signing off. Thank you. Jai Hind.